Bitcoin has just shattered expectations, rocketing past $112,500 and setting a brand new all-time high. But if you think this is just another spike in the charts, think again. Because the data, the momentum, and the sheer force of institutional capital pouring in all suggest that this could be only the beginning of a much larger move. In the next several minutes, we'll break down 5 major signals that could completely reshape the crypto landscape over the coming 30 days. Whether you're trading, investing, or simply watching from the sidelines, these are the trends and inflection points you cannot afford to ignore right now. Let's start at the top with the headline that has the entire financial world buzzing. Bitcoin has blasted through $112,000, then $113,000, and just kept climbing. As of July 10, 2025, Bitcoin reached an astonishing new all-time high of $116,146.44, a 24% increase for the year, and a clear sign that the bulls are not just back, but charging at full speed. What's fueling this run? In just the past hour alone, $192 million in short positions were liquidated, and another $50 million followed in quick succession. That's nearly $250 million wiped out in a flash, as those betting against Bitcoin got steamrolled by a wave of buying pressure. This kind of short squeeze sends a powerful message. If you're shorting Bitcoin in this environment, you're essentially standing in front of a freight train. Bearish bets are getting crushed as the market defies gravity, and the relentless upward momentum is forcing skeptics to cover their positions, adding even more fuel to the rally. The lesson here is simple. In a market this bullish, fighting the trend is not just risky, it's downright dangerous. But where does Bitcoin go from here? That's the question on every investor's mind. According to Polymarket, a leading prediction platform, a staggering 86% of traders now expect Bitcoin to hit $115,000 before the month is out. And some analysts are even more ambitious, projecting targets as high as $133,000 by September, provided that momentum holds and no unforeseen black swan event derails the trajectory. It's worth noting that we're in a rare and powerful phase of Bitcoin's 4-year cycle. Historically, these windows of explosive growth don't come around often, and when they do, they tend to catch even seasoned investors off guard with the scale and speed of their moves. What's different this cycle? The answer lies in the third major signal: the unprecedented surge in institutional inflows, particularly through spot Bitcoin ETFs. In the United States alone, spot Bitcoin ETFs have now surpassed $50 billion in cumulative net inflows. BlackRock's iShares Bitcoin Trust, known by its ticker, IBI8, has emerged as the undeniable leader, holding over 700,000 Bitcoin and accounting for more than 55% of all Bitcoin held in U.S. spot ETFs. These are not just numbers. They are a seismic shift in market structure. When the world's largest asset managers start buying and holding Bitcoin at this scale, it changes the entire dynamic of supply and demand. Daily trading volumes for these ETFs are now routinely exceeding $4 billion. To put that into perspective, these flows rival or even surpass the liquidity seen in some of the world's most traded stocks. And here's the real kicker. There's still a massive $7.4 trillion parked in U.S. money market funds, sitting idle and waiting for a reason to enter riskier assets. That's dry powder, capital on the sidelines, that could be unleashed at any sign of further regulatory green lights or market momentum. If even a small fraction of that money finds its way into Bitcoin and crypto ETFs, the impact would be nothing short of explosive. Meanwhile, the broader risk appetite across financial markets is surging, thanks in large part to the ongoing rally in technology stocks. Nvidia, the undisputed leader in AI and semiconductors, just set another record high, and the optimism is rippling through the entire tech sector. Tom Lee, a well-known market strategist, recently remarked, "There are 50,000 stocks, but only one Nvidia. It's rarer than gold." Goldman Sachs is now forecasting that the S&P 500 could reach 6,900 by the end of the year, buoyed by tech strength and improving macroeconomic conditions. This matters for crypto because when Wall Street's risk appetite is high, capital tends to flow more freely into digital assets. The alignment of bullish sentiment in both tech and crypto creates a powerful feedback loop, attracting even more investors who are seeking outsized returns in a record-breaking environment. But while Bitcoin dominates the headlines, another giant is quietly gaining ground: Ethereum. Over the past week, Ethereum's price has climbed to $2,997.11, up nearly 8% from the previous close. But the real story isn't just price, it's what's happening under the hood. The stablecoin ecosystem, built primarily on Ethereum, is exploding in size and influence. A recent standout example is the Circle IPO, which surged from $31 to $242 in just 10 days, highlighting the intense demand and growth potential for stablecoins. Stablecoins now serve as the backbone of the crypto economy, powering everything from decentralized finance to global remittances. Major financial players like JP Morgan and Robinhood are actively building tokenized assets on Ethereum, further validating its role as the infrastructure of modern finance. If industry forecasts are correct and stablecoins reach a $2 trillion market cap in the near future, Ethereum's value proposition and price could skyrocket well beyond current levels. Beyond Bitcoin and Ethereum, the altcoin market is showing renewed signs of life, with Solana and Arbitrum emerging as leaders of the next phase. Solana's price has climbed to $167.48, buoyed by technical improvements and growing developer activity. Arbitrum, trading at $0.4419,476, is also attracting attention for its scaling solutions and expanding ecosystem. Mainstream platforms like Robinhood are now offering staking for both ETH and Solana, making it easier than ever for retail investors to participate in the rewards of decentralized finance. What's more, heavyweight companies from across the globe, including Alibaba-backed firms, are beginning to explore integrations with stablecoins like USDC, bringing blockchain technology into the heart of e-commerce. This kind of adoption signals a tectonic shift, as traditional industries start to embrace the speed, transparency, and efficiency of digital assets. All of this comes at a pivotal moment for crypto regulation. With Crypto Week set to kick off in Washington, D.C., there's growing optimism that new legislation could provide the clarity and confidence needed for the next wave of institutional and retail adoption. Projects focused on real-world asset tokenization, like Solana, Arbitrum, and others, are particularly well-positioned to benefit from these regulatory tailwinds. So what does it all mean for investors and traders right now? Let's recap the major signals. First, Bitcoin has destroyed previous records, surging past $112,000 and triggering a massive short squeeze that has left bearish traders reeling. The bulls are firmly in control, and the technical momentum is undeniable. Second, institutional money is flooding into the crypto space, with spot Bitcoin ETFs breaking records for inflows and trading volumes. The involvement of giants like BlackRock is setting a new standard for market participation, and there's still trillions of dollars on the sidelines waiting for the next catalyst. Third, Ethereum is quietly staging a comeback, powered by the explosive growth of stablecoins and the development of tokenized financial products. As more institutions build on Ethereum and the stablecoin market expands, the case for ETH as a core portfolio asset only grows stronger. Fourth, altcoins are waking up, with Solana and Arbitrum leading the charge. Retail adoption is accelerating, and the integration of stablecoins into mainstream platforms and global commerce is opening up entirely new use cases and markets. Finally, we're at a critical juncture, with upcoming regulatory developments poised to either unleash a fresh wave of capital or introduce new hurdles. But the momentum, both in terms of price action and fundamental adoption, is firmly on the side of crypto right now. If you're waiting for traditional headlines to confirm what the charts and data are already telling us, you may end up missing some of the fastest and most dramatic moves this market has ever seen. This is a moment when being proactive, informed, and adaptable can make all the difference. So, let's turn the question to you. Which coin are you watching or buying right now? Is it Bitcoin, riding the wave of institutional adoption and ETF inflows? Ethereum, quietly building the next layer of financial infrastructure? Solana or Arbitrum, with their focus on speed, scalability, and real-world applications? Or perhaps another project that's flying under the radar? Whatever your answer, now is the time to stay engaged, keep your research sharp, and position yourself for what could be one of the most exciting chapters in crypto history. Make sure you're tracking these signals, staying ahead of the news, and not waiting until the next all-time high to make your move. The landscape is shifting fast, and those who act decisively stand to benefit the most. So, which coin are you buying right now? Drop your pick in the comments. Smash that like button, subscribe, and turn on notifications to make sure you never miss a key update or trading signal. This is FinWise Now, the place where smart investors stay ahead of the curve. Let's watch, learn, and grow together as crypto enters its next great era.